Oh, somebody's done it.
Monica, can we see how many other people are on here?
So we've got
49. Yeah, I see. Yeah.
At the moment.
Fine.
40.
And there's 130 odd, so 130.
Afternoon, everybody. We're just going to wait a moment or two while people sort of join. So just bear with us a moment. I can see we've got 60 odd people here already. We're expecting, I think, up to 130, but I'm sure there will be some dropouts. But I'm just going to give it 1 or 2 minutes to make sure that we've got as many people on the call as possible. I hope you're all having a good day and enjoying this late autumn sunshine. Participants have stuck at 75, still ticking up. I'm going to give it 1 or 2 minutes, and then at about 3 minutes past 1, bearing in mind that there's a lot of material to get through, I'm just going to start. I think is probably the best way to play it. Well, just bear with me a moment. I'll just have to get the door. Couldn't have come at a word's time. Right, well, that was bad timing, but quite handy in a sense, because I think it now means that we can definitely say that it's time to start. So good afternoon, everybody. My name is Conrad Hall. I'm the chair of the CIPFA Code Board and have been for the last 3 or 4 years. So if you're worried about the state of your accounts, you could probably say it's at least partly my fault. We've got colleagues on the call who are going to be running through the material, so my job really is just to help facilitate things. So in a moment, I'm going to hand over to Ian Murray, who, as you see there, is the Director of Public Financial Management for CIPFA, and then to Sarah Sheen, the Acting Head of Standard Setting for CIPFA. Both of them, I think, will be very well known to you. Ian, like myself, actually, trained with District Audit, and then continued his career on the audit side for a number of years until relatively recently joining CIPFA in the last 2 or 3 years, I think it was, Ian, with a wide range of experience across all aspects of the public sector. Sarah, as colleagues I think will know, has been very active in the standard setting space for a number of years for CIPFA now, playing a leading role supporting the CIPFA Asset Board and development of the accounting code, and is a well recognised expert in that area. So I'm not going to take up time with the introductions here. There may well be some things in terms of housekeeping I was supposed to say, but the usual things, since we're not all in a room, like file and phone, don't apply. I think this is being recorded, so by staying on here, you can consent to that, and we'll make the recording available for colleagues who've not been able to join this. With that, unless Sarah reminds me that there's anything else really, really important that I was supposed to say, I'll hand straight over to Ian for a few introductory remarks, if that's okay.
Thanks, Conrad, and good afternoon, everybody. Thank you for taking time out of busy days to attend the webinar this afternoon. I don't want to take up lots of time with introductions either, because we've got a fair few things to get through. I think the only housekeeping thing to mention is probably questions. So There is a Q&A box. If you've got questions, if you can type them into the Q&A box, and we'll hopefully have some time to deal with those at the end. I suppose just some scene setting. So as Conrad just alluded to, the state of local government financial reporting and auditing is pretty perilous at the moment. Many of you will have seen the stats that public sector audit appointments announced yesterday, and I think there were five sets of opinions, or 5 sets of accounts with opinions published by the end of September this year, which means we're now at just under 1,000 sets of accounts which either haven't been produced or haven't been audited as yet. And so it's against that backdrop that we're trying to set standards at the moment. And I'm sure there'll be some questions about that later, and we'll share with you what we can. We'll come on to it later, but we envisage that, as well as this consultation, which is about the code for 2024-25, we will probably we will definitely be running another consultation exercise this side of Christmas, looking at some short-term measures to support to support the sector as we try to clear the backlog and reset financial reporting and auditing in local government, and get it back on something approaching a normal footing, in whatever normal might be in the current circumstances. So happy to deal with that later. That isn't the thrust of what Sarah's going to cover with you today, but just a bit of a heads up that that there will be more coming from CIPFA we envisage in the coming weeks and months. So without further ado, I'm going to hand over to Sarah, who's going to talk us through some of the kind of the key changes that we're proposing in the code for 24-25, and then hopefully we'll have some time at the end for comments, questions. But over to Sarah. Thank you. Sarah, you're on mute. So.
Well, it had to be the first time today. Thank you, Ian. Very glad you were here then for that. Brilliant. I wonder if you can move to the next slide, please. That was the only bit anybody missed. This next slide, please. So as Ian said, what we're going to do is look principally, with the exception of the very end, the changes to the 24-25 code. The consultation period is closing next week, but hopefully everybody will have had a chance to look at the consultation. If not, I'm hoping this might inspire you to look at responding to some of the consultation questions. And just as a reminder, you don't have to respond to every question. It might be something that's a particular issue for your authority. So we would very much welcome any responses to the consultation on the code. And that's on the consultation pages of the CIPFA website, and it's and the responses are to cipfalasac.org. But that's all explained on the CIPFA website. It should be easily located. But I will get Monica to send you out the link with the delegate pack at the end of the presentation. So we're looking principally at these areas that are outlined in this slide. So that's IFRS 16 mandatory implementation. And I can't stress enough that it will happen as of the 1st of April 2024. Infrastructure assets developments. And again, that is in relation to some of the local audit issues that you might have seen on the cross-system statement, and other standards changes, FRS 17 insurance contracts, CIPFA strategic plan. And for the first time this year, although we've probably done this at various points, but as a whole policy statement or a policy issue that we're consulting on, we've also included in the code consultation emerging and other financial reporting issues to be forward looking as well. And to look at, as I said, the last page will look at the consultation on non-investment assets and pensions. And we'd ask you to look out for that in probably November this year, and it will be a very, very important consultation. So again, we would welcome any responses you have on that. Next slide, please, Monica. So I mentioned just a few seconds ago that CIPFA took the very, very marginal, and it was the most marginal of decisions to agree deferral for mandatory implementation. And there was voluntary implementation before that for 2 years, but it's mandatory implementation as of the 1st of April 2024. So the 2024 code will therefore include in its main body, and it moves from section, an appendix to the code to section 4.2, IS 17, the preceding standard will no longer be extant, and therefore the new standard IFRS 16 will be in force. As a part of that new standard, it will also include the measurement of service concession assets and liabilities, service concession arrangements. And the provisions are, so for those of you that have looked at the provisions in Appendix F or have thought about perhaps early adopting, the provisions will largely be unchanged. That's except for the narrow scope amendments to IFRS 16, which we'll talk about in a couple of slides. And there are transitional arrangements which are changing for PFI PPP as well to confirm approach, which aligns with the rest of the public sector. Next slide, please, Monica. So one of the issues that CIPFA is interested in, although it won't change its decision, it is how prepared local authorities are for mandatory implementation of the standard. Just to support stakeholders, CIPFA has already issued guidance on IFRS 16 as the early guide, and it issued guidance alongside the co-guidance notes last year. And it's also issued draft guidance because it's quite complex on PFI PPP, and that's available on the CIPFA bulletins page as a consultation, but it will issue that as formal publication this year with the co-guidance notes. It'll sit alongside the IFRS 16 guidance. So that guidance is already available to stakeholders and local authority accounts preparers and their auditors to see how that can be implemented in practice. It's already available. So we also have issued, to help local authorities, CIPFA Bulletin 14, so last year's year-end bulletin. Apologies for that. My camera's slipping. So we did issue CIPFA Bulletin 14, which has a project plan. So I think you might find it incredibly useful to look at where you are against that project plan to work out your preparedness. And if you are behind, there's always periods of catch-up, but it might assess the things that need to be done, particularly for bigger authorities with lots of leases. And things like project plans, things like the depths of the assurance needed for different parts, the systems needed, and the information requirements that need to be understood across the authority. So it's a complex, it's not that complex a standard, but it is a standard that is affected by the whole of the authority, because leases, as you probably are already aware, are held by various departments. So they'll need to understand the differences in information. And it will impact on your prudential indicators as well, because these are credit arrangements that would be included in them. Just as one that's not included on the slide, there's also a bulletin which has been out for 2 years, CIPFA Bulletin 11, and that's on the assets which are held by local authorities, but which are owned by schools. And so I would recommend that for any authorities that've got lots of schools with assets, and they've got voluntary aided or voluntary controlled schools, that bulletin is looked at when you're applying IFRS 16. Next slide, please, Monica. And moving to our difficult issues, infrastructure assets. So we won't go too much into the history of this, because I'm sure anyone with infrastructure assets will be thoroughly conversant with all the issues that have happened. But suffice to say, historically, there have been information deficits and issues around the derecognition of replacement expenditure. And there is a change that is brought forward in the code that allows the removal of the disclosure for gross replacement cost of the carrying amounts and for accumulated depreciation. This is supported across the Great Britain and the 3 jurisdictions with a statutory intervention on the carrying amount and the amount to be recognised on the replacement expenditure, which under network assets has been theorised as being nil, but that's now supported by statutory provision. For that, I mentioned the cross system statement earlier. In July, government ministers issued a statement on this in England, and it was indicated that that was probably too short a timescale, which I think might be the case, and CIPFA is considering this, having regard to those ministerial views. There will be further consultation. It will be picked up. I anticipate it'll be picked up in the consultation that we mentioned at the beginning of the presentation. Next slide, please, Monica. So the changes to standards, these are highly technical ones, and I think largely most of these won't apply to local authorities, but just so that you know, there's the lease liability in a sale and leaseback, and it's all about the remeasurements to try and avoid gains that weren't supposed to be recognised. Again, I don't think it's a major issue for local authorities. 2 forms of amendments to IS1 presentation, and this is linked to covenants and different definition of covenants than we normally use. Again, I don't think it's going to have a particular impact on local authorities. But again, one of the reasons we consult on this is to make sure that this is the case. And 2 standards then, which we are very well, as sure as we can be that this probably will not apply to local authorities. That's supplier finance arrangements, amendments to IFRS 7, and international tax reform. For Pillar 2 model rules, again, a very technical change, and these are amendments to IS 12, and that is effective immediately. And so I don't think those will largely apply. They are quite technical changes to the standard, so I won't go into those in too much detail at this juncture, but I would welcome any comments on these, particularly if you think that they will apply to local authorities. Next slide, please, Monica. Thank you. And the changes that will probably apply. And so when leases was adopted into the code, we have had some debate about whether or not IFRS 16 will apply, but it is decided that it will apply, like the rest of the public sector, by analogy to IS 17. This, for many assets, won't be a particular issue for many leases, but it is for those arrangements on assets which involve the indexation of unitary proportion of the charge. So when you've got an index, a price index on the charge which relates to the asset, it will affect your authority with PFIPP arrangements. So like I said, that will be something that will apply and that you'll need to look at. And again, that is covered in our guidance. Next slide, please, Monica. One of the small amendments, but it's one of these nitty-gritty things that we get down to when you look at the detail, is feedback from consultations, request and guidance of IFRS 16. CIPFA has issued draft guidance to help preparers by using that. And it's when you're recognising a lease liability on day one, we instead of doing it in the retrospective approach, we're doing it on day one instead of fully retrospectively. And this treatment is similar to the treatment in the rest of the UK public sector. And so therefore, we've done it by guidance, and I don't think there are many authorities applying it. But from 24-25, the ITC requests views on this and proposal to mandate this code for local authorities. So apologies for using terminology there. So next slide, please, Monica. So insurance contracts. In the code, we have a separate section at the end of the code, which says standards which rarely apply to local authorities. And that currently is there listed with IFRS 4. We'd be replacing it and using the same application approach in IFRS 17. And the exposure draft on the consultation paper handles it in exactly the same way. IFRS 17 does say that is largely written for insurance companies, but if you do have a definition, a contract that meets the definition of an insurance contract, then we would need to account for it under IFRS 17. We've consulted on this. For those of you that have followed our consultations, I think for the last couple of years now, we've consulted on it, and we get differing answers on whether or not there are contracts that meet the definition of it. People mention pensions, guarantees. Again, I'm not so sure about that, but then I don't see individual transactions. So it might be for your authority. It is under IFRS 4, and if it is under IFRS 4, then it would just logically apply that you would apply IFRS 17. And then we've seen some other examples around mutual insurance agreements and some in the fire authorities arena, which we're still looking at. But again, we don't think there's widespread application, although we may issue guidance on that. Next slide, please, Monica. So CIPFA LASIC has a strategic plan. This is probably going to change because CIPFA LASIC is undertaking an effectiveness review at the moment. So there may be more or groupings of different projects. And so I'm sure that colleagues in the future will provide that for you. But these are the current projects in CIPFA working plan, and a number of them on this slide have been included in the consultation paper, but I'm going to focus on the narrative reporting one particularly, and I've already talked about a number of the others. And I've also very briefly going to touch on the review of the format of the code. So next slide, please, Monica. So we've introduced something which we think might assist local authorities in meeting the requirements of, I'm not sure for those of you who might remember, Sir Tony Redmond's recommendation for statement of standard service information and costs. Apologies, there's lots of statements and lots of S's in that. That's been put on the stocks at the moment by government, but we think that it might be better reported in the narrative report. And the aim of the overview performance is it could be a precursor to, or possibly, if it works very well, might be an effective replacement for the standard statement of information and costs. The aim of the performance report is to give the user a short summary that provides them with sufficient information to understand what's in the organisation, its purpose, and what comes out of it. Shouldn't duplicate what's already in the narrative report, but provide a summary. So if a user wants to look at a very particular thing that it has interest in because it's looked at that part of the summary, it's fine. Or it should be enough for a user to go away and say, I understand what I need to understand from the financial statements, and I don't need to go any further. It's there to encourage the lay person in terms of readership. And hopefully to gain interest in that. And it might be a way of engaging local authority users of the accounts into the main financial statements. But to accord with that, next slide, please, Monica, we have the summary of financial information. So that summarizes service outturn. Similarly for the housing revenue account, a very high level summary of the local authority balance sheet, its financial position, an analysis of usable reserves, capital expenditure, the underlying need to borrow and capital financing requirement, and a summary of significant commercial activities and their risks. Again, this is a consultation, and therefore you may think that there are other things that should be in this summary, or things that shouldn't be in this summary. And of course, CIPFA would look forward to hearing your views. The overview of performance and the summary of financial information is voluntary, bearing in mind all the local audit issues for the first financial year of application, i.e. 24-25, but we would look forward to views on its application. Next slide, please, Monica. So we're looking at the review and structure and format of the code. We're looking at particular issues like accessibility, how easy it is to access the various bits of the code, the approach to the content of the code, which is IFRS, as I'm sure everybody is adapted, couldn't say that word, apologies, for the local government context. And so one of the things that we get two contradictory views. There are some people, and they're both very legitimate, that want a high level summary on a principles basis. And there are other views which are that all the local authority accounting requirements should be in one place. And that's the way the code is airing at currently. And so we'd like views on what you think would work best for you. There's the adaptations or interpretations that are an important part of our accounting, where this differs from IFRS. And so therefore it would be really useful to know whether or not these are placed in such a way that local authority users of the accounts, users of the code, and auditors as well, can thoroughly understand where the adaptations or interpretations apply. There's a good structure to the current code, but we think it's worthwhile looking at whether or not we should change it and follow the order of the financial statements to help local authorities to follow it through. But again, there may be better alternatives, and we'd be happy to hear of any other suggestions. As I'm sure everybody's aware, statutory accounting provisions have a distinct effect on local authority accounting, and they are repeated throughout the code. So we're looking at perhaps rationalising how those are included in the code. Next slide, please, Monica. So this is another slide. I won't go. We've already talked about local audit, so I won't go into that. Statutory specifications talked to a certain extent about statutory adjustments, and they have their place, I think, in local authority accounting. But there are two which CIPFA has raised concerns about because they affect financial reporting, but financial management as well, and will affect future financial reporting. That's the DSG and the IFRS 9 statutory override. They're both time limited, so they will come to an end, and they both have an impact on the resources and resourcing, and therefore the financial management of the authority. And so CIPFA LASIC is interested in views on how well that is reported and whether or not anything else can be done. The next slide covers the recognition of net defined benefit pensions and assets, and then the consultation also covers changes to CIPFA standards which could impact on the code, particularly the grant section, but also, as I'll talk about in a couple of slides, the impact on assets as well. Next slide, please. And I won't go into this in much detail. We hope to issue a bulletin on this, but I'm sure you might be aware of, particularly if you are in this position as an authority, we hadn't anticipated that there are actually pension surpluses, which could mean that you have a pensions asset. And what that means is that wasn't anticipated when the code was written. It never anticipated we'd ever have to apply IFRIC 14. And what the IFRIC is talking about is how much of an asset ceiling, how the asset ceiling interacts with that surplus. And you can only recognise an asset up until the amount of the asset ceiling. And you can only recognise an asset to the extent that it is realisable by the authority. So we'll issue a bulletin to that effect and talk about that in some more detail. But in theory, there's no more change to the code. But what we're asking for, as I said, we weren't anticipating this when we wrote the code. And so we'd be interested to know whether more specifications could be included in the code on the reporting of pension surpluses. Last slide, please. Thank you, Monica. And so finally, I won't spend too long on this. I think we've already given some run up to it, but following this HM Treasury thematic review and the cross-system statement, which was issued in July on local audit and the crisis in local audit by government, we are looking for a possible 2-year transitional period and pausing. We're also looking at proposals for the measurement of property, plant and equipment following the thematic review. Our focus is on how we stipulate in the code the 5-year evaluations. I'm sure you're aware that indices are not currently specified or not applied in the code, and we're exploring whether that might improve the currency evaluations rather than, as I'm sure as some authorities we understand anecdotally, have to do annual evaluations of the code, and that wasn't the original intention of the code. And then there's a conceptual review of pensions and how that might impact on local authority reporting and how we apply IAS 19. We're considering pensions disclosures for their ability to assist the users in decision making. I'm sure everybody's aware that there are lots of pensions disclosures. And we are suggesting other changes which are not in CIPFA LASIC's gift, but to assist in pensions reporting. And as I mentioned earlier, we're going to look at updating the current position on infrastructure assets and give more information on the future decisions on infrastructure assets. Those are all possibilities. I sit there with the CIPFA LASIC chair. They haven't been yet fully debated, so they might change considerably. I would say the watchword on that. But we wanted to give you an idea of the things that we are consulting on, but it might change because CIPFA LASIC needs to take very difficult decisions on these issues. And so that debate still is with CIPFA LASIC. And so I'm sure once those decisions are made, there'll be another webinar to explain precisely what the consultation paper will include. That's the end of my presentation. Thank you all for listening, and we're happy to take questions.
So thank you very much for that. Really comprehensive as ever. There are 2 questions in the Q&A, so I'm going to start with those if that's all right, and then others may well add to those. So just for sort of convenience, I guess, I'll read them out for everyone. So the first one is around leasing, and it reads, IPSAS 43 leases has an effective date of January 25. I know IFRS 16 has been applicable to the private sector for a number of years, but could CIPFA not consider changing the accounting requirements for leases in line with the IPSAS date, rather than introducing in the 24-25 code, given the pressures councils are already facing on local authority accounting and audit? That's from an anonymous attendee. I'm not quite sure how the webinar works. I have a feeling that if you post a question, it naturally goes as anonymous, but if you wouldn't mind putting your name colleagues, it's always preferable. But Sarah, if you wouldn't mind just answering that one in the first instance, please.
Thank you, certainly, Conrad. Yes, I mean, in many ways, the anonymous questioner answered the question in the response. We've delayed this. It was first 2018, and we're in 2023 now. So we've delayed this for some years for very good reasons. But as I mentioned, it was a marginal decision for CIPFA. I think one of the difficulties that CIPFA will have is the rest of the public sector has applied this for 2 years by the time we will have started applying it. There is some good news to that in that we can learn from private sector, the rest of the public sector and the private sector practice. But it is very difficult to have an argument for local government in where we delay any further. I do appreciate the difficulties in local audit, and that's why we're looking at other measures, but it is very difficult to bring any further delays forward. I'm sure Conrad and Ian have any further comments on that.
Yeah, I mean, thanks, Sarah. I'll bring Ian in a moment if I may. I think the point you make is the right one. So there can be lots of good arguments made as to whether various accounting standards are best for local authorities, and there's often a lot of debate on that. I just my personal view, I think as a sector we kind of struggle in a situation where as here we are several years behind the rest of the UK public and private sector, to say, well, things are terribly difficult, therefore can we delay further, even though I can't completely get the logic for it. I'm always more likely to be receptive to an argument on on kind of first principles, if you like, rather than the really important expediency point. But of course, one of the purposes of webinars like this, and indeed the consultation that we run, is precisely to get these comments from the sector. But I think it's just really important that you kind of hear that the pushback from from the board, from me and others, would be what's the sort of justification as to why that's the better treatment for local authorities. Ian, do you want to add to that?
To agree with what you said, I suppose in that case, though, it is so. I don't have an encyclopedic knowledge of the IPSAS standard, but I know it's based on the IFRS. So the thrust of the standard is the same. It's a right of use asset and a liability. So it would be for me, there's the risk, and building on what Conrad says, is it's just a convenient way for us to delay something for another period of time. So I don't think it would change the accounting. It just delays it again. And one of the challenges we face in but appreciating the preparer and auditor burden, it's believe you me, it's at the forefront of every conversation we're having in this space at the moment. But we also have to acknowledge that the world doesn't stand still, standards don't stand still, and if we don't try and keep moving in a forward trajectory, we just continue to store up more and more problems. So again, I might be wrong because I don't know the IPSAS standard inside and out. I wouldn't say I knew IFRS 16 inside and out, but my understanding is that the key accounting principles behind both standards are the same, because the IPSAS standard is based on the IFRS.
Thanks, Ian. I've got 3 other questions out. I'm going to group them slightly. So 2 of them relate to pensions. So I'm going to ask those first, and then go on to a separate one on heritage assets. I think I'll ask them separately rather than one at a time, although there's a degree of overlap. So the first one is from Anonymous. Will any potential changes of the net defined benefit pensions assets in the code apply retrospectively to 2022, 23 and 2024, as otherwise preparers and auditors would have to tackle the complexity of surplus assets and any changes to the code, which may cause them having to revisit judgments? Sarah, do you just want to take that point on retrospective application or otherwise, please?
There aren't going to be any changes in principle to the code. The code follows the IFRIC, and our guidance follows the IFRIC. So there are no changes to the code. So if local authorities have followed the requirements of the standard, then there will be no changes retrospectively, and there isn't any retrospective application to it. It's guidance. And if you follow the IFRIC, then I don't think our guidance will give you any problems or change of decisions. And certainly there are no changes to the code, because the code simply applies IFRS.
Okay, let's see if there's a follow-up to that. In the meantime, let me ask Martin Smith's question on pensions as well. So regarding pension assets, we found it difficult to determine whether our pension scheme had a minimum funding requirement or not. If this was made clearer in the code, then that would be all that would be needed for us, at least. Is that something that can be accommodated within the code, Sarah?
There's a possibility. I think the IFRIC isn't quite as precise as we'd like. And there's quite a wide definition. And certainly we come to the in our guidance, and it's not agreed yet, so please take it with it's not agreed yet, and so it's not a full position yet. It appears that there is a minimum funding requirement. It's not just in the IFRIC. There was a 2015 agenda decision by the IFRIC committee, which kind of solidified our view. It's taken us a long time. As I said, the guidance wasn't as easily determined. The overall thrust of the IFRIC is clear, but some of the provisions aren't as clear as I would like them to be, as a personal view. So, but if that case is made, CIPFA could consider it, although it is quite difficult when the ISB hasn't made any changes to the IFRIC when asked.
Okay. I'm going to just hold those responses for a moment. People may want to come back and I'll ask other questions on pensions. Just while we're doing that, I've got a separate, different question from David Ellis on heritage assets. So I received a practitioner question on whether IPSAS 45 might impact on reporting of heritage assets in the code. The standard appears to have an expectation of these being on balance sheet as a default, whereas the code has a more laid back approach. Are we laid back on that, Sarah?
We have, we followed UK GAAP on that and not the IPSAS. And so therefore the UK GAAP doesn't require where the costs of getting the information, and sometimes it's well nigh impossible to value some heritage assets. They may be invaluable because of that they are so specialist that it's not possible to attach a value to them. And so we follow the UK GAAP guidance where it is that case and the costs to measure those assets would outweigh the benefits to users, then it is very difficult to see a case for doing that. Again, CIPFA will need to review the IPSAS, but I don't think generally we would need to move towards the IPSAS, but it's something that CIPFA could consider. But I think the position in the code is fair and transparent, and so we'd need to be very clear on anything that would take that and move it across.
Yeah, I mean that sounds right to me. I mean, just thinking of my own council, Newham in London, we have one or two really quite significant assets, and accountants maybe it always feels rather odd, if you like, to be trying to attach a financial value to them. They're not something that we would contemplate selling, and even if one did, the value that is attached to them by residents for really good reasons, would be unchanged whether one valued them at £1 or £10 million. To move on to another question, this one's from Anonymous, and I get where Anonymous is coming from. I might even start answering this one and then hand over to Sarah or Ian. So are there any plans to update and to make more concise the example financial statements in the guidance notes? I mean, I think, probably everyone would agree that local authority accounts on average are longer than is perhaps desirable. I think the experience I've had in the last 3 years is what's much harder to get agreement on is which bits people don't want, because whenever one looks at some sort of particular part of it and looks at streamlining notes to the accounts, for example, it always seems to be a different interest group or government department or other relevant party who sort of pops up and says, but that bit's sort of really important to me. There is always quite a lot that local authorities can do in terms of trying to sort of streamline that. But I think it's probably also fair to say that a lot of practitioners find, I know from my own experience this was the case. One, there's something just pretty easy about sort of sticking with something that you've done previously. You probably have the systems in place to produce it anyway. And the separate but really important point on this, there is an important point about the presentation of financial information. And as I say, you can do a lot in that space yourself, but you are to some extent constrained. It's always felt to me that the question of streamlining or simplification, or whatever term one prefers to use for that, is much more driven by some of the requirements that sort of underpin the production of all of the information. It's not whether one has this particular note or that particular note in the accounts that really drives the workload. It's not that the note is relevant, but it's not really what drives it. So sort of more fundamental questions about treatment of depreciation rather than MRP, for example, and statutory overrides. It seems to me things that drive complexity in the statements and also time to prepare them. Which is why I emphasise, and it is in the question as well, the example financial statements are in the guidance notes. It is guidance. The code sets out what you must do. Guidance notes, are there to make suggestions and guidance. So, don't feel constrained to follow those to the letter. If you think you've got something better, fine. The important thing is to have a clear rationale in your own mind, why we have chosen not to produce this note, for example, or that note, or whatever it might be. So, Ian, did you want to add anything to that?
I was going to I think just building on your point. So, when we write standards and we write guidance notes, they have to be written for every eventuality. And if you're assuming that every eventuality applies to you, then you're automatically over disclosing would be the first point. So so I think there's that. That said, there's a slightly facetious thing to say, but yes, there are plans to do that. They are at an early stage, I think it's fair to say. We obviously had the levelling up select committee in the summer, which was looking at what's the purpose of a set of local authority accounts, who are the users, questions about audit, and I think the findings from that will be a useful prompt to do that. At CIPFA, we're establishing a better reporting group. We're struggling with engagement, being completely frank. So there is I suppose a bit of a call to arms, or meet us halfway. If you've got if you've got ideas, or you want to get involved in trying to make a more meaningful set of local government accounts, then we're open to that. But it does require engagement by practitioners to make a reality of that. And I think the only final thing I'd say is the reason that some of this has been paused is because we actually think this represents an additional burden. So even if we had ended up with a simpler or a more streamlined set of financial statements, there's a fair amount of investment that needs to go in by local authorities and their auditors to deliver against that. And I think there's a question about with the backlog that we have at the moment, whether now is do we have firm enough foundations, I suppose, to start to build something from the ground up in that way. But there is still definitely a long-term ambition for us to do that, and Sarah trailed some of that actually in terms of the performance overview report and those sorts of things, where we would like accounts that people were using were meaningful and added value, and we probably acknowledge that in lots of cases we're not quite there yet. So absolutely, and if people on this call on this webinar are interested, we're looking for people to get involved in helping to take that forward as well.
Can I?
Let me re-emphasise that one, and then I'll bring you in. So, I mean, you know, God, I know how busy everyone is. You know, I feel it myself. But where you can, people who put forward and volunteer to help in these areas, it's enormously appreciated. Two, I suspect a lot of people on the call would actually find it's really quite an insight into how the standard setting process works. So the PT in school, is terrific if you can. I do know how busy everyone is. Sarah, sorry, I spoke over you.
No, that's perfect, Conrad. Just to reiterate both the calls, if you do have interest, if you write to policy.technical@cipfa.org, and I'll get Monica to put that into the email that she sends out to you, then and want to volunteer, then of course that would be great. And we're always interested in good practice examples. Just to build on what both Conrad and Ian said, the guidance notes are clearly written so that every transaction is material, and sometimes they might even be mutually exclusive. It's just to show when an authority has a transaction and it might be material for them, then this is how they could produce it. But all the other points relevant to Ian and Conrad said are also relevant in terms of the better reporting group will be looking at good and best practice, and so we'll be able to present in different ways. But it has to show everything, because for some authorities it will be material, and so that's whether it's included in the way that it is. But it is very clear, and we put in numbers of bold fonts that is the case, and local authorities should choose the accounting policies and disclosures that are relevant to themselves and their users of the accounts, importantly.
Yeah, so it's a point that can't be emphasised enough, is it? Because sometimes there is this sort of default assumption that it applies to everyone, whereas actually the reverse is true. It covers every possibility. It's almost inconceivable that it could all apply to any one authority. Okay. Now, I think, and they're showing as open in the Q&A, but we have answered the one on Ipsos 43 and the effective date. We have answered about retrospective application of net defined benefit pensions assets.
Just on that one, Conrad,
Yep.
Can I just 2 minutes on that, or
Yeah,
2 minutes on that? I don't think it should have retrospective impact, because the trigger for these surpluses is the recent LGPS revaluations, and effectively it's where audit and where finance reporting and audit hasn't kept track with. So we have got some issues in the kind of immediate short term, but we shouldn't be going backwards too far, because effectively it's the 1st of April 23 revaluation date that's triggered this. So it shouldn't impact backwards. And as a point of principle, we only want to go back and do things retrospectively in the code if we really have to, and we will be some things we'll go back and do as we talk about coming out of the local audit backlog. But it shouldn't. My view is it shouldn't really have that retrospective impact, because the trigger is at a point in time, and so shouldn't.
Yeah. And I don't know who raised the question, and they may be thinking about circumstances in their own particular authority. So if you have got an example of where you think that may be an issue, it would be really helpful if you wouldn't mind just sharing the details with the Secretariat. Because if there is something that we've missed, then obviously it'd be really good to know that. We have answered the question on heritage assets. I think we've answered the question on the minimum funding requirement within the pension scheme, and we have discussed notes and the guidance notes. Now there are 10 minutes left on the call. We don't have to use them. A budget is a limit, not a target, as I'm fond of saying when I'm trying to get people to spend less money. But I'm going to pause for 1 minute just in case anybody would like to raise anything else. If not, I'm going to suggest we close this at 1:50. I'm just going to pause that moment. Okay, not seeing anything. So thank you everybody for attending.
Before we close, Conrad, can I just add one final thing, which isn't
Yes, of course,
necessarily
please.
related to code? So people may or may not know that, unfortunately, Sarah is leaving us at the end of October. And I just wanted to thank her. It's an opportunity, like we'll have various opportunities, but we don't get opportunities often to. So I just wanted to thank Sarah for everything she's done for CIPFA and all of the hard work that she's put into the code and guidance notes and all things local government reporting and accounting over I don't know, it must be almost 2 decades, is it, Sarah? So I'm sure she'll still be in and around It's a Small World, but Sarah will be leaving us at the end of the month, and I just wanted to recognise her contribution and thank her for it.
Well, thank you for that, Ian, and can I please just add my own thanks to Sarah for that. She's been stalwart in this space for as long as I've been involved with the standards setting agenda at CIPFA. So I know we'll have other opportunities to say so, Sarah, but thank you for all the work that you have done. Perhaps colleagues as well. You may or may not know Sarah personally, but for I do not know how long, a long time. Everything you've done on the accounts has been to no small degree shaped by Sarah's work. So please do. If we were in a room, we could do it sort of more audibly, but please do at least think your thanks towards Sarah. And obviously mark that occasion probably at the end of the month, and thank you for that. So with that, thank you to Ian and Sarah for their contributions today. Thank you, all of you, for all of the work that you're doing. I know just how hard things are with the state of the local sort of accounts and audit, as well as the general pressures that you're under. You all do a fantastic job day in, day out, for public finance and local authorities. So if it feels tough at work at the moment, as it likely does, just remember that you're making a huge contribution. I think I can bring things to a close there. Thank you very much, everybody. Goodbye.
Thank you.